Hello everyone, welcome to the webinar series, the ITC Alliances for Action webinar series today. Thank you for joining. This webinar series supports the ACP countries and industries, and it's part of a series called Resilience Today, Growth Tomorrow, designed to support stakeholders of the coconut industry in the Caribbean region and in navigating the post-COVID landscape. The topic of today is Unlock Finance and Investment for Next Level Growth. This is our 7th webinar, and we'll have a description of innovative financial instruments and impact investment funds targeting farmer cooperatives and micro, small and medium-sized enterprises, or MSMEs. I'd like to begin by thanking our donors and partners, especially the European Union, the CARIFORUM Directorate, the Organization of African, Caribbean and Pacific States, the Caribbean Agricultural Research and Development Institute, CARDI, and all our other important regional partners, in case I've omitted some. Thank you also to our speakers today. Today we have representatives from the Caribbean Development Bank, from the Smallholder and Agri-SME Finance and Investment Network, otherwise known as SAFIN, and the European delegation to Uganda. I see we have over 112 participants, so that's a great turnout from over 29 countries. So thank you so much for taking the time today to join, especially if you're on holiday. Before we start, I'll just run through a few frequently asked questions and house rules. So please note that the webinar is being recorded and it will be uploaded to CARDI's YouTube channel and Coconut's website. We'll share the link in the chat so that you can easily access as of tomorrow. We'll have short Q&A sessions after each presentation. So during the presentation, if you have any questions, you can just jot them down, or alternatively, you can write them down in the chat. Please remain muted if you're not talking, just to avoid interference. And if you would like to ask a question, you can either use the chat or raise your hand. And finally, if you have any other questions that you think of after the webinar, because that often happens, please be aware that there is a Facebook group called Alliances for the Coconut Industry Development for the Caribbean. We'll also share the link to that Facebook group in the chat. And we plan to use this more and more interactively. So any questions that you have in retrospect after the webinar, you can post them there and we'll do our best to answer them. Before we begin with our first presentation, I'd like to launch a short poll just so that we can get a better idea of who we're talking to and of the sectors that you all represent. So you should see it now on your screens. So which group do you represent? Are you from the farmer producer community? Are you an entrepreneur or agri-processor? Are you a professional providing services to the industry? A financial institution? Or a policymaker or regional and international organization? So if you could just take a couple of minutes to tick the correct box, just so that we can have an overview of who we're talking to. And while you do that, I'll take the opportunity to present our first speaker. So we have Luther Saintville, who's Senior Operations Officer from the Agriculture and Rural Development Department at the Caribbean Development Bank. And Luther will be presenting on agriculture sector strategy and related financial instruments in the Caribbean. So thank you for voting, and thank you, Luther, for being here today. Over to you.
Thank you, Sarah, and good morning all. Let me say thank you and greetings to the organizers, sponsors, or the panelists, participants in the Caribbean and wider field. Thank you for having me. I will briefly present CDB's agricultural sector strategy and speak to how it links to support for the small and micro-sized enterprises in the region. By way of introduction, the Caribbean Development Bank, we are headquartered in Barbados. We have 19 borrowing member countries. That's all the English-speaking Caribbean, Haiti and Suriname. We have 3 regional members, Colombia, Mexico, and Venezuela, and 5 non-regional.
Luther, I'm very sorry to interrupt you. I'm really sorry, this was my fault. The poll, there was a second poll that came up that was going to complement your presentation. I forgot to announce it, just about the financial instruments. People are completing it. I'm sorry to interrupt, just because it might not make sense otherwise for them to see it pop up on the screen. So
Okay.
the question is just, which financial instruments have you utilized for your activities? Please take the applicable answer. I'm not sure if this, I think this directly relates to your presentation, Luther. Really sorry to interrupt. Okay, so can we share the results? Okay, so it seems it's the bank loan and microfinance is the most widely utilized financial instruments from our audience. Thank you very much. Sorry, Luther, please go ahead.
Okay, no problem. So just briefly, a presentation on our agricultural sector policy and strategy. That was, the most recent one was approved this year, in March of this year. And it followed a study on the state of agriculture in the Caribbean that we did jointly with the Food and Agricultural Organization. We conducted consultations throughout the Caribbean, farmers, agricultural support institutions, donors, to get a good feel for what were the challenges confronting the sector and how best the bank could respond. And just to see a lot of the findings of that study are consistent with what the observations we've made in the post-COVID environment. So the study highlighted the 2 critical issues, the issue of low productivity growth and weak market linkages. And the region, we see agricultural sector, we have low and stagnant yield development over the last several decades. We all know that the agricultural sector in the region is highly vulnerable to natural hazards, hurricanes, droughts, flooding, etc. And we also note in particular, as it relates to, to meeting market requirements, an inability for original agri-producers to supply high quality products on a consistent basis or to meet global standards. So within the framework of our new agriculture policy, the bank is seeking to support its member countries in building a resilient agricultural sector. An agricultural sector that is competitive by improving productivity and strengthening market linkages and using resources more effectively as we seek to improve the agricultural sector with resilience to climate change. And as an institution that is focused on poverty reduction, we are also looking at ways to improve inclusivity by ensuring all vulnerable groups have access to services, markets, etc. Our focus is on the value chain. I mean, all aspects of the value chain. We're seeking to identify constraints in the value chain and to address those in a holistic manner. And throughout all of our financing operations, when it comes to SMEs and agriculture, we kind of do a kind of diagnostic to make sure that whatever projects or programs we are financing, ultimately we can bring products to market in an efficient manner. The bank has a range of financial instruments that it uses to finance investments in the agricultural sector. We have capital loans and grants, we have financial intermediation, and we have some regional and projects and some, kind of what I call special programs. Just to say primarily, we are banks, so the main modality we use for financing interventions among our countries, is through the provision of loans. It's through our lending operations. We try as much as possible to provide grants, but I think increasingly that is becoming a challenge for us. So capital loans and grants, as I said, is the primary means of financing, and we need works, feasibility or design studies, and that is the primary means through which we finance interventions in our board member countries. That picture you see on the left, ongoing works for an irrigation and drainage project we are currently undertaking in Jamaica. Our grants are mainly for technical assistance interventions and focus either nationally or supporting the provision of regional public goods. The conditions and eligibility criteria for our loans and grants, they are country specific. We have different country groupings, and the conditions on which we lend to countries is based on where they fit within that country grouping. The main instrument through which we engage with SMEs is what we call financial intermediation. That is where we provide financing to national development banks in country, and they in turn lend to the SME sector. And as I mentioned earlier, that we seek to engage our national development partners in a manner that provide financing for SMEs at all stages of the production cycle. We also provide technical assistance support as and when needed to assist national development institutions to strengthen their capacity to support the SME sector. And increasingly, particularly in the post-COVID environment, we are looking at ways to reduce our interest rates to allow for greater reach and to provide financing to meet working capital needs of businesses. Regional projects, technical assistance and grants, that's generally supporting 2 or more countries. And we tend to focus on the provision of regional public goods. In the case of the agricultural sector, SMEs, research and training, we've worked with CARDI in the past, and the expectation is that we will continue to do so as we seek to jointly bring innovative products to resolve some of the present challenges facing the agricultural sector. We have a few special programs. Our Basic Needs Trust Fund program has been in existence for about 40 years. It's those of you in the OECS, Jamaica, Belize will probably be aware of the program. It's largely provides support for infrastructure, basic needs infrastructure, roads, water, supply systems in rural communities. But increasingly, we have looking at a livelihood component where we provide support to assist small groups, SMEs, in developing skills and know-how, market information, etc. We also have what we call the CTCS program. It's a capacity building program where we support SMEs to improve their competitiveness through studies, attachments to other businesses, etc. And more recently, we are implementing the 11th EDF standby facility, where designed to improve BMC access to the CARICOM Single Market and Economy and the EU CARIFORUM Economic Partnership Agreement. So just a sample of some of the projects that we are implementing that support SMEs in the region nationally. For example, we've very active in the area of upgrading access roads, irrigation and drainage, renewable energy. In Jamaica, we are financing in partnership with the United Kingdom Caribbean Infrastructure Partnership Fund, renewable energy system tied to the development of an irrigation system in communities in the
Luther, sorry. There was a bit of noise. Let me. Can you try now, Luther, to unmute?
Yes.
It's a bit noisy. Maybe if you can adjust the microphone, the headphones.
Give me 1 second. I'm not sure.
Now it's okay. Now it's okay.
Okay.
Now it's okay. Yeah.
All right. Good.
Thank you.
So yes, we have capacity building in climate smart agriculture, and I'm supporting the development of post-harvest infrastructure. I'm in support of good agricultural practices. And on the regional front, we have a few projects ongoing. Looking at strengthening cassava industry value chains, looking at technology validation and market assessment. We've recently approved a grant to the Caribbean Catastrophic Risk Insurance Facility to facilitate the development of parametric insurance products for the agricultural sector. That was approved last month. And we're aware of the plight of SMEs after hurricanes. Supporting their recovery, so we hope we can provide some solutions to that. And we're also supporting, in the process of supporting the Caribbean Agricultural Health and Food Safety Agency in facilitating intra-regional trade, the development of guidelines in support of intra-regional trade in plant and animal products. So I end here. Thank you, and I look forward to engaging in the question and answer session to clarify any issues that you may want. And thank you, Sarah, William.
Thank you very much, Luther. Thank you for the presentation. It was clear and to the point. If anyone has any questions for Luther, again, you can either raise your hand and ask him directly, or you can also post a question in the chat, whatever you feel more comfortable with, and I can read out the question. If you're still processing what he presented, you can always, keep your question to the side and we can go over them at the end as well. Or you can just write it in the chat, whatever you prefer. Before we go on to our next presentation, we're going to have another quick poll. Can we put the poll up on the screen? Thank you. Ahead of our next presentation. So, what are the key challenges to accessing finance by farmers, cooperatives, and processors in your country, according to you? So you have different choices. Is it too expensive? Mismatch of products or terms versus needs? You're not eligible? Or no options available in the area? And we have a question in the chat. So for people who joined late, don't worry, I did mention this at the beginning. The recording and the presentation will be available on CARDI's YouTube channel and also on the Coconut's website. And both links will be shared here in the chat. So you'll also receive the link by email. Anyone who's registered today will receive the link, so don't worry about it. Okay, so massively people have replied mismatch of products or terms versus needs. It could also be a case of it being too expensive. Thank you very much. Okay, so as I don't see many questions for the time being, I suggest that we move on to our next presentation. So our next presentation will be presented by Michael Van During from our partner organization SAFIN, the Smallholder and Agri-SME Finance and Investment Network. Michael is a technical specialist at SAFIN. Hi, Michael. Nice to have you here.
Can you hear me?
Yes, we can hear you.
Excellent.
Thank
you. Thank you, Sarah. Thank you, William, as well. Thank you, everybody, for joining. It's a real pleasure to have an opportunity to present on SAFIN and our work with the investment prospectus process, which I'll be presenting. So just so I can figure out how to switch slides. Just as a high-level description of who SAFIN is and what we are. First, I think it's worth mentioning that SAFIN is a network which includes 48 partners, and all of these partners are coming from a quite diverse background of institutions which all share a commitment to accelerate access to finance for agri-SMEs, essentially trying to target finance to the missing middle. In terms of the diversity of institutions, we're trying to bring together all different aspects and angles of this access to finance work and value chain work in the field and internationally. So that includes large organizations like DFIs, public sector institutions, but also private sector institutions such as financial institutions like banks and impact investment organizations. We work with specialized NGOs, UN agencies, TA providers, research institutions, but also on the local level, we try to include regional farmer organizations and agri-SME organizations. So the work that these institutions essentially try to come together around as a network. So each of the institutions essentially has their own agenda, but have agreed to collaborate along these 5 work streams, as we call them. Now, 4 of the work streams are really around the exchange of information, and that includes the mobilization of capital into the ecosystem, also working around the development of innovations and scaling those innovations, but also promoting and enabling policy environments, so policy work, advocacy work, which is essentially sort of speaking of one same voice when it comes to the sector issues. And finally, there's the development of a platform to exchange information and develop a strategic knowledge agenda around, so that everyone keeps themselves informed on their experiences, their knowledge, and upcoming innovations, as well as their ongoing work on a regional and international basis. Now, the one work stream that I focus on here particularly is this alignment of investments work stream, which essentially takes all of this information and all of the exchange of knowledge and tries to apply it concretely on the ground. And by doing that, essentially, we've launched a number of pilots which correspond to the development of an investment prospectus. The investment prospectus is a document that we develop. It's a country-level diagnostic of trying to identify essentially transformative investment opportunities along value chains. So it is value chain specific, but it aims to produce systemic change. And the way that the document is essentially structured is by providing first a country and value chain overview, identifying the key challenges, identifying also who the key actors are from the public, private, and development perspective, including, of course, SAFIN partners. The aim being really to align a lot of the SAFIN member work in those given countries. Then it outlines some of the existing products and services and key actors in the financial sector to get an understanding of essentially who is doing what the main challenges are, where are the key gaps, and based on that information, we essentially try to identify opportunities for either strategic investment or collaborative solution development. And finally, the investment prospectus document will provide, will outline some potential solutions, some approaches that it recommends for SAFIN partners, but also beyond to key stakeholders. The IP, therefore, can be used in a variety of ways on an individual basis, just in terms of understanding the analysis, policy dialogue, investment planning, etc. But it can also be used to identify partners and develop partnerships on the ground. Finally, what you can see here is sort of how the process is led, which is beginning with identifying which country is selected, which is decided by the SAFIN partners at this stage of the process in terms of the pilots that we've led to date. And then we review we've added a step before the IP development process, which IP development itself, which is a scoping analysis where we seek to cover a number of value chains, but before we perform a real deep dive through the IP. So that scoping analysis is essentially an initial attempt to identify where those opportunities areas lie. And then on the basis of that, and in conference with our partners, we try to decide where we will focus the IP. We'll bring together a number of partners that include SAFIN partners, but also key stakeholders that are important to the value chain and the opportunity that we've identified within that value chain. And we also select an anchor institution, which will essentially coordinate the work on the ground. I myself am part of the SAFIN Secretariat, which is a quite small team. We're housed under IFAD, but IFAD is a member of the SAFIN network. And so we have limited resources in terms of leading these efforts. So we really count on these country anchors to help with the IP development process. And based on the information and the findings that come out of the IP document itself, which is validated on the ground with partners and other stakeholders, we then decide on how to move forward. And I'll discuss that a little bit more in some of the examples that I can give. So moving forward, to give you some information on where we're actually working right now. We have 7 active pilots. The first one was launched in Jamaica, the second one in DR, so that's our Caribbean focus there. We've launched Uganda and Nigeria, and most recently Sahel in Africa. And we've launched 2 scoping analyses in India and Colombia. So in order to give you some concrete examples of how we actually work, our project, our pilot in the Dominican Republic was launched in coordination with ITC. It focused on the coconut value chain and associated crops. The anchor there was Judd, who helped coordinate the work on the ground. We launched this in 2018. And the key challenges that were identified through the investment prospectus were at a high level three core challenges that affected especially this sort of aspect of access to finance for agri SMEs. And that was first the shortage of materials, then the concentration of the processing activities in the country, and then the challenge of planting or replanting coconut trees. And so for each of these challenges, we identified opportunities that we could act on, either through our partners or in a coordinated approach. And for the shortage of materials, it really relied on how we could provide both the financing and the TA that was required to improve quality, quantity, and especially the varieties and the associated crops that could work together to improve production levels and income. In terms of the processors, the opportunities were really to support new emerging actors who are also developing new products and varieties, accessing new markets, and those also link to cooperatives and farmer organizations, which also need to be developed and strengthened in the region. And finally, in terms of planting and replanting coconut trees, the access to patient capital and the coordinated approach that is required to support all aspects of that type of activity. So, excuse me, what came out of that in terms of the specific, I'm sorry, next slide. So in terms of translating these opportunities to specific models, we provided three concrete approaches, different solutions, each of them trying to address a specific piece of the challenges and opportunities that were identified. First, one around working with local financial markets to develop a credit product. Second, developing a patient capital fund that would allow to address some of those tree planting or replanting challenges. And finally, a fiduciary commission, which is essentially a productive alliance whereby various actors come together with specific targets supported by the government. Out of those three, through the validation process, talking with partners, the first credit product development seemed to hold the most promise. And so going forward and still working with closely with ITC, we essentially defined a number of next steps. First, because they are in the process of developing their Alliances for Action program in the region, and therefore the opportunity here is to embed the investment prospectus within their wider program in order to address that access to finance aspect of the wider program. And so once the IP is out, our objective really is to be able to pass the baton on to an institution that will then lead the solution development based on the IP findings. And this is, in the case of ITC, the second step, which is looking at redesigning the proposed financial models, maybe taking bits and pieces from the three that were proposed, and aligning that with their own value chain analysis, interviews of actors and processors, understanding of the market, and then understanding where the opportunities lie within the external market or domestic market for sales. And finally, for SAFN, the next step once we start implementing a given solution is to bring our partners back into the fold and gauge their interest and ability to support the implementation. Now, I wanted to say just a word on COVID, because there is a focus on that here in this webinar. And in terms of the IP, because this was developed last year, there wasn't much of an impact. The impact that we're feeling really today is, I think, in terms of the restrictions in travel and in-person meeting, both for SAFIN and ITC at this stage, to really be able to be on the ground and get that in-person understanding of the value chains and some of those challenges. So that is, I think, a clear challenge. And then another one is trying to also gauge what new sources of investment or funding may become available to the same agri-SMEs that we're targeting. So then I wanted to give a second example, which is in Nigeria, where we're similarly in a stage of development where the IP has been published. There we are working 3 value chains, which are maize, soybeans, and cassava. Our anchor is a private sector institution called Afex Commodities Exchange, and the key challenges and opportunities, which I won't go through in detail, were quite diverse, and well, it had to do also with the fact that we were targeting 3 value chains. And then the way that we approached it was essentially to identify the 3 solutions or approaches suggested by the IP that would make most sense. 2 of them involved, that's number 1 and number 3, direct investment in the development of processing facilities. The second one, which is developing what we call ASPS, or agro-service providers, which are essentially intermediaries between producers. So they act as aggregators of producers, but also providers of a number of services, including access to input, finance, training, potentially also access to markets and storage. They could include cooperatives, but there's a number of private sector or NGO institutions working in this way in Nigeria. And that solution, that approach, addressing those types of institutions, created a lot of excitement within the group of stakeholders that we had brought together around this. There were different models proposed to address them, which we're still in the process of reviewing, including blended fund structure, or working through the government or existing initiatives from our partners or others, or working through complex partnerships. But ultimately, moving forward, what we decided to do in order to really get a clear understanding of the best approach was to launch a feasibility study. So we're working with the Lagos Business School, who's going to be leading a study in 3 phases. First, a landscaping exercise to understand who these ASPs are and how they're working, and what different models exist. Second, to project what their financing needs are, understanding where they really need investment, what type of investment, and whether any TA is required, either pre or post investment, to support that. And finally, based on that information, developing a solution design to really implement that investment into those organizations. And then again, obviously, finally, it's to bring SAFIN partners around these solutions and get them involved in the implementation and have that align with their own agendas. Finally, there again on COVID, we released the IP at the end of last year, and currently in this process of studying the ASPs. Access to the ground is limited, and makes this a little more challenging. But by working with actors who are present on the ground, they have the ability to sort of do more than we would be otherwise. So I'm going to stop there, and I'm happy to answer any questions if you have some. Thank you.
Thank you very much, Michael. Thank you for the presentation. Actually, there is already a question for you in the chat. Let me just see. Okay. So we also have some questions for Luther, but I think let's address first the questions for Michael, as we're still fresh from the presentation. So first question from Adrian Curtin is, what are 3 to 5 characteristics for agri-SME dense value chains?
So for agri-SME dense value chains, well, the characteristics that we use in order to identify the value chains, I mean, in terms of agri-SME dense, it's really just understanding that well, obviously it's going to change from one country to the next, but it's really sort of identifying the MSMEs that are active along these value chains. And it doesn't really matter which level of the value chain. We really try to work within value chains that involve a large number of these types of or size of actors, mainly because of their potential for employment, but also because they are the types of institutions that typically fall in the missing middle between access to finance from microfinance institutions and larger banking organizations. So the exact definition of MSMEs really varies widely from India to the Dominican Republic or Colombia or Nigeria, quite honestly, and we sort of develop that on a case-by-case basis. But we go by the needs, really.
Thank you. There's another question for you, Michael, from Andrea Castellanos. How do you define or select the anchors in each country? What is the role of the research institutions in SAFIN? And are you considering any scientific technical advice from research institutions? That's a long question.
No, excellent. No, good questions though, but let's see. So again, I would say really this is a case-by-case basis thing. It has to do with the type of actors that we're bringing together in each country, which are widely different between, again, Dominican Republic and Colombia, Nigeria, India, now Sahel, which we're just launching. So who do we bring together, and who are they in terms of SAFIN partners? Now, in terms of the anchor, we try to elect someone who's first of all willing to do the work, because it's going to require additional work, and therefore usually someone who's going to have skin in the game, who's going to benefit in one way from the type of work that we're engaging in. So those are two clear criteria. It has to be supported by the steering committee as well, and the steering committee includes other SAFIN partners, but also key stakeholders. So we try to really have someone who's going to be engaged and who sees enough interest that they're going to invest themselves in the project. They have to be well connected, obviously, as well, between all of these players. In terms of the research institutions, again, it's really dependent. High level for SAFIN, the research institutions are extremely important in terms of the knowledge that they provide, the research that they develop, and the ability to share. So if the research that they do is relevant to agri-SME finance, then it makes sense for them to publish their findings on our platform and reach that specific audience. But they can also be important specifically to the IP development process, where we are working with research institutions in India, for instance, to inform us on the IP development and understanding what not only are the key challenges and gaps, but also what the way forward is and what the opportunities are. So yeah, so that's where I would stop on there. Any other questions?
No, there are some questions now for Luther. So thank you very much, Michael.
Thank you, Sarah.
Thank you. I'll quickly go through the questions for Luther now. There's one from Rashid Walters. What is the process of requesting funds, grants, loans, equity, etc., from the Caribbean Development Bank? Luther, could you answer the question?
Sorry, I didn't quite, sorry.
Yes, no problem. I put you on the spot. There's a question from Rashid Walters. What is the process of requesting funds, like grants, loans?
Yeah, I got that, yes, yeah. I was just about kind of going to type in an email address where you could channel, requests to. Kind of difficult to answer a question like that in a chat like this. So I will provide the email address in the chat. Yes.
Sure. There's another one from Govind. Are there any opportunities for development microfinance instruments in various countries in the Caribbean, as most small producers cannot meet the cumbersome security requirements of more formal financial institutions? I'm putting this question generally to everyone.
That's a difficult one. I would say yes, there are opportunities to develop microfinance products, but it's probably something that CDB could support, but it's for other persons, if there's an initiative to develop in a products, then we could provide support to those initiatives, but it's not something that CDB would be in a position to develop directly, because we do not directly engage with borrowers at that level. We tend to, like I mentioned in my presentation, through a process of financial intermediation, where we go through institutions that directly service SMEs.
Thank you, Luther. And I see that you already replied to Adrian's question in the chat. So we can move on now to the next presentation. Again, just a reminder that if you have any more questions, you can always put them in the Facebook group, and we'll do our best to reply. So before I introduce you to our next speaker, you can see the poll on your screens. Quick poll on impact funds. The question is, have you been in contact or in negotiations with impact funds? If you could just please vote yes directly, or someone I know, or I don't know what this is. And in the meantime, let me introduce you to our next speaker, Adolfo Cires Alonso, Program Manager for Finance, Agribusiness and Land at the European Union Delegation to the Republic of Uganda. And Adolfo is going to be giving us a presentation on finance and investment in Uganda and the Yield Uganda Investment Fund, to be precise. Before I give the floor to Adolfo, let's just quickly see the results on the screen. Okay, so a lot of you don't know what impact funds is, so I think this is a good, perfect timing for Adolfo's presentation. Hi, Adolfo.
Yeah, hello, Sarah. Thank you for the introduction. Actually, it's good to know that there is a lot of people that don't know what is the impact fund. So that will be one of the main objectives of my presentation. So I hope that I managed to clarify what is impact fund. But if I don't, please make some make some questions. You are welcome. So good morning from Uganda to the people that is in the Caribbean. Then good afternoon to the people that is in Europe. Good afternoon also to the people that is here in this part of the world. I'm going to present what are we doing from the European Commission in terms of supporting access to finance in Uganda, and I will talk specifically on the Yield Uganda Investment Fund, that is actually an impact investment fund. So hope that after the presentation today, more people get a little bit more of information on what is an impact investment fund, that now there is more and more this kind of impact investment funds being set up all around the world. So Let me start by giving a little bit of background on why we're working on access to finance. Of course, it's related to the fact that there is a number of millions of people in extreme poverty. Then there is a number of billions of dollars that they are needed to meet the SDGs. And of course, private sector play a very important role on meeting these SDGs because of creation of employment and eventually creation of wealth. So we're moving in the Commission, publicly moving from supporting NGOs and government also into supporting the private sector. So this is the main objective of access to finance programs. Also, we are supporting this because in Africa specifically, there is a high percentage of businesses that are SMEs, specifically, or in the data that we are gathering is 90% of the companies in Africa are SMEs compared to 53% of the businesses in the US and 65% of the businesses in Europe. So in Africa in particular, SMEs are not only the biggest in number, but also the biggest in terms of jobs and a substantial amount also in terms of percentage of GDP. So that's why also it makes sense for us to support SMEs. Let me give you also a little bit of background on the different kind of products that are available in the market for SMEs in terms of access to finance. And this is also related to some of the questions that we asked before. So you have access to finance from family and friends. That is normally the smaller the company and the smaller the amount, family and friends. Then also you have angel investors that support companies in the beginnings. We move then into microfinance institutions that support a little bit bigger companies, similar amounts to the family and friends, but a little bit bigger companies. And then venture capital funds. Venture capital, that means earlier stage of venture capital funds, so venture funds. Then from there, we would move into bigger companies and bigger amounts, commercial banks. Majority of you were answering that it's actually accessing money from microfinance institutions or commercial banks. But then also a relatively important number of people is accessing money from family and friends, as we saw in the survey. Then from commercial banks, we move into private equity or capital markets. That means that we move into a longer term, sometimes bigger size as well, but specifically longer term of financing provided by private equity. And in that space of private equity is where we have what we call the impact investors as well. Impact investors are basically private equity funds that they have specifics on objectives and results, expected results related to impact. And impact normally is measured by either creation of jobs or support to smallholder farmers in a kind of outgrowing systems, etc. So this is a little bit the landscape of different financial instruments that is available all around the world. I am going to come now to the specifics in Uganda to give you some context of the size of Uganda. It's a 45 million people country with an employment in agriculture of around 70%, 24% of GDP is quite important, agriculture in this country. Mainly subsistence farming, but also with a number of SMEs in the sector. Some of them are informal. When it comes to access to capital, and I think some of you also mentioned it in the request of information. Some of you are talking about expensive access to capital. Why is it complicated for some agriculture SMEs to get capital in Uganda? Is because the interest rates are between 20–25%, short term, 2–3 years, 120% collateral that is requested by mainly commercial banks, but that is the kind of capital that is available for SMEs in agriculture. Private sector credit to GDP in Uganda is 14%, when other countries in the region like Kenya is 28%. That means the percentage of access to credit or amount of money available in banks for credit to companies compared to the total amount of the GDP. India 50%, but the other economies like China about 100%, Europe about 100%, US also about 100%. So that gives you a little bit of idea of where we are. The capital markets, that means the stock exchange or private equity funds in Uganda is quite nascent, started 5 years ago. Private equity funds have been set up in the last 5 years, but it still is quite a baby in terms of stock exchange development or private equity funds. Let me provide you just a chart that visually explains a lot on what is the Uganda finance landscape. You have different sizes of circles. Starting from the left is related to the size of companies, and that is related to microfinance institutions, basically. You see the size of the circle, that is the amount of money available from microfinance institutions for lending. Then we move into the second circle, that is tier 1 or banking sector. Commercial banking sector is the biggest circle, big amount of money, and available from commercial banks. But in many cases, we have been hearing the concept or the term missing middle. So there are a number of companies that are not able to move from the microfinance into the actual more formal bank credit. And that is a missing middle of number of companies that they are not able to jump from microfinance or family or friends into the actual formal private sector credit. From that big circle, then we move into the next one, that is private equity. Private equity is quite small in Uganda, but a few years ago it was not existing. And then we move into equity capital market, that is basically a stock exchange money, capital available from a stock exchange for companies. That is a bit bigger. And again, we find another missing middle here. The missing middle from moving from banking capital, banking sector, banking access to commercial loans into being invested by either a private equity fund or the stock exchange. That is normally capital that is longer term, 7, 8, 9, 10 years. So this is the kind of landscape that we find in Uganda. And then we have a number of initiatives in the European Union delegation in Uganda that is trying to address those two missing middles. You can see there are a number of projects. I'm not going to enter into the details of all the projects, but we have a facility that is called START, supporting small agribusiness companies to access capital from banks. We have Green Companies Accelerator that support the companies to improve the way they do their business plan or prepare their financial projections, or eventually they manage the company in a better way to also access money from commercial banks. Agricultural Business Initiative as well is having the same objectives. And then we move into some actions that they are related to the banking sector. And here we have established a relation with the Uganda Development Bank, because normally the Uganda Development Bank, even if it is part of tier 1 banks or normal banks, they are having products that they are trying to address the issues of agriculture, meaning they organize loans that they are longer term with grace periods, etc. So we have now a technical assistance that is deployed in the bank to increase the capacities of lending to the agriculture sector in the Uganda Development Bank. Eventually, we are also now doing an analysis of why there is such a big interest rate spread between the deposits and the loans interest. So we're doing that analysis now, and we're also doing an impact assessment of a facility available in the Bank of Uganda that is called Agriculture Credit Facility, to see how did it work and then how it can be improved. That is related to commercial banks. Then, when it comes to addressing the missing middle of companies to be able to access money from private equity funds or a stock exchange, we have a couple of initiatives. One is Yield Uganda Investment Fund. That is actually the one that I'm going to come now as an example of how we set it up. It's a 20 million euros fund that is trying to support agribusiness companies to access this kind of capital. Instead of accessing maybe 2-3 years loans from commercial banks, it's trying to support companies accessing 7-8 years loans and in special conditions. We set it up in 2017, and I will explain a little bit more later after this. Then we also have another initiative that is called Deal Flow Facility, trying to support companies to access private equity and maybe eventually being listed in the stock exchange. So this is a little bit the map of the actions that we're doing. I'm going to go now specifically into Yield Uganda Fund and the objectives of why we set it up. One is to contribute to the development of Uganda agriculture, because as I explained before, it's quite important in terms of employment, percentage of GDP, etc. We, all of us, I think, in this call, we are already aware of the importance of agriculture, so I will not talk much about that. But eventually also, we want to support the development of agribusiness companies, and that is done through two ways. One is provision of capital, long-term capital, and the other one is also a provision of what we call business development services for the companies that the Yield Uganda Impact Fund, Impact Investment Fund, is invested in. We set it up in 2017. In the beginning, we were two investors mainly, I mean, because IFAD is our partner, so it was IFAD, European Union, plus the Uganda Pension Fund, called the National Social Security Fund. That was 2017 with a first close of 12 million euros. Then on a second phase last year, we managed to attract also capital from Finnish Church Aid Investments and Soros Economic Development Fund, that both of them increased with 4 million, making the whole fund 20 million. And Pearl Capital Partners is our fund manager, the one that deals with companies, carry on due diligence, and suggest to the investment committee which companies the fund should invest on. Up to date, we have done from 2017 7 investments in 7 companies with almost 6 million euros in investment. That means it's a ticket size of investment of almost 1 million euros per company, although we have companies that we are investing around 300,000 euros. Some of the companies are having 1.5 million euros. And the instruments that we are using is a mixture of loan, with the difference that it's a loan with a longer term than the ones that the commercial banks are offering here in Uganda, and quasi-equity. Quasi-equity is actually loans that are convertible into shares depending on the performance of the company. We also have a couple of deals that they are almost completed the due diligence and for a value of almost 4 million euros. So that means that eventually in few months we'll have 6 + 4, almost half of the fund, 10 million euros committed and invested. We have still another 2 years to go, but it's making progress. Then, as I explained before, it's not only about capital, it's also about business development service. I will come to the details of what is the meaning of business development service, because this is not capital, or this is not a loan provided to the companies. It's something that support the company to improve the way they perform. And as we mentioned before, also this is an impact investment fund, meaning that we don't invest in companies if there is no impact. And the impact basically is how many farmers are the companies that we are investing supporting, either by improving the quality of the work that they do, or providing a special kind of payments or special kind of pre-financing, etc. Plus also the number of jobs that they are created. So up to now, with the 7 companies, additional 5,400 farmers were supported, and then 885 jobs have been created with those 6 million euros invested. Just some examples of companies that we have invested. You have Chemifar, that is a lab that is quite important actually for exports, and is trying to improve the capacities of the lab to do different kind of tests related to mainly exports, but also control of the quality of the products. We have another company that is called Pristine Foods that produce liquid eggs for different kind of businesses like hotels, restaurants, bakeries, etc., avoiding problems with the fresh eggs and some rotten products. Then another example is Rain Tree Farms. That is a quite innovative company that produce moringa powder, moringa oil, most of it for sporting, and it has a relevant outgrower system with a big number of farmers on it. These are examples of some of the 7 companies that we invested. These are 3 of them. Coming back to the business development service, what is business development service? Well, it has a number of activities there, like improvement of the governance of companies, setting up boards with independent persons. Many of the companies that we are investing are family companies, but that issue of the right governance of the companies is important for investors. So we have been supporting them in establishing boards with people with the right capacities and right experience. Support to the financial systems, the improvement of quality, marketing, creation of outgrower systems. All those kind of actions are part of business development service, and this business development service is established on a matching grant, providing matching grants. It's not capital, it's a amount of money that is dedicated to all these interventions, and the project provides 50% of the money that the companies need to carry on. Now, because we're talking also about COVID-19 impact, I will explain how the fund, the Impact Investment Fund, the Yield Uganda Impact Investment Fund has adapted to the COVID-19. Well, you see, in Uganda, like in many countries, we had a full lockdown for 8 weeks. Now we have limited movements, only limited movement of cargo is allowed. Then, of course, this is a challenge for SMEs because there is a decline of the demand of export markets, but also is a decline of products and in the local market as well. There is an increase in default rate by clients on payments for clients, and there is also a decrease of production in many of the companies that we are investing. This also put challenges for the operations of Yield Uganda Fund because the fund manager staff, they couldn't move to companies to carry on due diligence. We had a number of co-financiers that they were going to co-finance some of the companies where we invested that because of the COVID-19, they just pull out. They just decided not to invest in the companies because they thought it was not the best moment to invest. It was very risky. And well, on the other side, there are some opportunities as well. There is an increase in demand for this kind of capital, actually, when we're looking at impact, patient capital related to creation of jobs, and then somehow having that kind of impact story behind the investment. So, yeah, those are some of the impacts. But then the fund itself, as Yield Uganda Fund, we carry out some specific responses. So we have to go into each of the companies, come back to them, revise the business plans, prepare business continuity plans, but also, well, you do a new business plan that now, because of COVID-19, has changed. We decided also to extend the business development service support for another 2 years, but also we moved from 50% matching grant to 85% so that the companies don't need to use some of the liquidity that, of course, is going to be constrained with this situation. And then additionally, we had some restructuring of loans, of some of the loans that we provided to these companies that have been given a grace period of payments, depending on the situation of each company. Each company is a different story. Some of them have been affected more than others. Some of them have been really hit by the crisis. Like, for example, the liquid egg, the number of orders has actually reduced to almost zero because most of the hotels and restaurants have been closed for a long time. So depending on the situation of the companies, we have been doing the restructuring of loans. This is basically what the fund, the Yield Uganda Fund, has done in response to COVID-19. Then we are still looking for partnerships. Co-financing on our investments with other impact funds or eventually development banks, etc., is something that we are looking forward to do. We're still looking for markets, export markets. Basically, we look for digitalization of the fund itself and the companies where we invest. We have experts that support companies improving the way they operate. So we're still looking for that kind of experts to support our companies. And then the improvement of the corporate governance of the companies where we are investing is also quite essential. So I think that this is a little bit an introduction to what Impact Investment Fund is, and I am of course willing to answer any of the questions that you may have. Unfortunately, I have only 15 minutes. It's something that is very interesting. It has been a process of setting up a fund in Uganda, but now we can say that it's progressing. You know, it's progressing. It's challenging, but it's something that is having results already. So, welcome to any of the questions, and yeah.
Thank you. Thank you, Adolfo, very much for the presentation. It's always good to have examples from other regions and other countries, and I'm sure it's really interesting for most of our audience today who are from the Caribbean region. We do have a question in the chat from Raymond Trotz. What range of interest rates is usually available for development loans to cooperatives and other small business organizations?
Well, I will answer the question based on the situation pre-COVID-19, and then now also what is happening now. The interest rates, as I explained in the presentation, has been ranging basically between 20 and 25%. There have been a few initiatives that they are giving concessional loans to cooperatives or to small businesses through the agriculture credit facility of the Bank of Uganda. And in that case, it was a concessional loan that reached actually around 12% on interest rates. But all of this is changing now because the appetite for lending is less. And actually, the interest rates are increasing. And so we're monitoring that now, what is happening. But of course, because of COVID-19, now the situation is worse. Even if the central bank rate of the Bank of Uganda has decreased. But we don't see the effect on lending rates, especially to a small business. Normally, banks tend to lend to the same big customers that they are safe, and many of the banks, they lend to the same people, you know. But when it comes to small businesses, it's not the same situation. It's a small amount of money available, high interest rates, and with a high collateral. So, but I would say, yeah, between 20 and 25%.
Thank you. Thank you very much. Are there any more questions related to this last presentation? You can either indicate them in the chat or raise your hand. If not, in the meantime, so thank you very much, Adolfo, for your presentation once more. And if there are no more questions, there's just a quick poll that we'd like to put for you all, so that we can always improve our material and webinars. If we can just put the poll on the screen. So it's just two quick questions. The first one is about today's content, how satisfied you were. And the second one is what you'd like to see next up in our series of webinars. So this was webinar 7 of our series, and we still have a few more to cover. So your feedback is important to us. So thank you very much to our 3 speakers for these really informative presentations. Again, just a quick reminder that any questions that you didn't get answered today, you can always post in the Facebook group. The link is in the chat. Alternatively, you can also follow the promotion of our webinars and all of our activities on our Instagram account, which I just posted the link to now in the chat as well. And before we finish, I'd just like to thank once more our partners, and donors, the European Union, the CARIFORUM Directorate, the Organization of African, Caribbean and Pacific States, CARDI, and thank you to our speakers again, from SAFIN, the EU delegation to the Republic of Uganda, and the Caribbean Development Bank. So any other questions that you have, please don't hesitate to put in the Facebook group, and just stay tuned either on our Instagram or on CARDI's social media platforms for our next webinar. And wishing you all a great rest of the day, wherever you are in the world. Thank you very much.